Welcome to the A Minute to Midnight Show, folks, and you can find our shows on YouTube, on iTunes, and on our website, aminutemidnight.com. Glad you could join us today, and I hope you'll enjoy today's show with Lynette Zang. I want to offer a very warm welcome to Lynette Zang on the A Minute to Midnight Show. Lynette is kind of semi-regular now as a guest on the show, and we always have such fun conversations, and I always learn a lot. So it's great to be chatting to you again.
Oh, I'm so happy to be here, Tony. You know, it's a lot of fun for me too.
Yeah, and you've had some really excellent shows on your own channel lately, which I've been listening to. And thanks for the plug for New Zealand on there. Oh, I had to laugh at some of them, but yeah, it's great.
We have to do it in person.
We will, yes, absolutely.
We will.
Yeah.
You know, going to New Zealand it's not that I have no bucket list, but it's the last thing that's on there, been on there for a very, very, very long time. So I have to make that happen.
Well, let's hope you can do it before there's any major economic collapses or anything. And you had a video out the other day.
I don't know. With everything that's going on, Tony, I'm not so sure. But the good thing about it is that those tickets will be super cheap.
Yeah,
when there's an economic collapse and people don't travel so much, then that means that the plane tickets will be a lot cheaper.
As long as the airlines don't all go under. I mean, obviously They can't all go under.
Exactly.
So, yeah. Now, you actually had a video out the other day called Debt Bubble is Popping Now. That was pretty interesting. Do you want to give us a bit of a rundown on some of the information in that?
Absolutely, because this is really a global phenomenon, and we know that we have been in an inverted yield curve. And just for your viewers to understand what that means, it's when the shorter term bonds or bills pay more than the longer term bonds or bills. That's an inverted yield curve because it doesn't make any sense. It's illogical. And that tells you that there is recession. This is going to be way bigger than just a recession this time, but in the near future. But what has happened now that tells me that the bond bubble is popping now is because the difference in those yields is getting wider and wider and wider. So you have, for example, although it's happening in a lot of the different areas, like the 3-year and the 30-year, but even the overnight interest rates at like 2.5% are higher than to loan that money out for 10 years at less than 2%. So once those differences get wider and wider, it is an indication that we are about to enter the recession imminently, like any second, or, which is really more what I think, or that we have already begun and it's just not yet being recognized.
So as far as bonds go, why would anyone want to even own them at the moment with that sort of situation?
You know, that's a really interesting, and it's a great question. And some of the work that I'm doing for tomorrow, where we are for the very first time, so I'm giving you an exclusive because I haven't even spoken about this on my channel yet. I'm going to talk about it tomorrow, so whichever way it gets released. But for the first time since the U.S. Treasury has been publishing data on their auctions, the individual investor is buying more of the longer dated treasuries than banks, other sovereigns, or other central banks, and sovereigns being governments. That tells me, and we've talked about this too, it's all about risk transfer. So in this particular article in the Wall Street Journal that I was reading, they had 3 different people in there from all different age groups. And they all said this basically the same thing, which was we are so uncomfortable with the overvalued stock market that we're going to the safety of bonds. This is all about perception management. It is merely your perception that bonds are safer. But what is a bond? A bond is a debt instrument. And why in the world would you loan anybody money that you had to work for and accumulate, which we know is not such an easy thing to do these days? Yeah. Why would you loan anybody money knowing that they cannot pay you back? And throwing in the negative interest rates in there too. If they do pay you back, they're paying you less than what you loaned them. It makes no sense. But people, it's called dumbing you down, right? They don't understand what they're positioning into. And so they do it. Yeah, why would they? They would do it if they don't know better. If they knew better, they'd be buying physical gold and silver.
Yeah, which is, I guess, going to be a fair bit of the thrust of what we're going to be talking about today. But talking about the stock market, though, because that's been making record highs, and although I see the last 3 days it's been going down. But
minor.
Yeah, but the thing is, I always think back to something I heard from Sir Evelyn de Rothschild, where he said in an interview, he said that the stock market is not a real reflection of a country's economy. And of course now, I mean, like him or hate him, and, you know, he's a powerful man, and if anybody knows, he does, where things are going. But, you know, the stock market is kind of, I guess it's more like, rather than an indicator of what's happening, it kind of trails behind what's really going on in terms of the economy, doesn't it?
Well, I think it really, Tony, it really kind of covers it up, because we've been trained to think that it reflects it, because at a point in time, you know, in the 50s and the 60s, maybe the 50s, it actually did, because a corporation would issue stock, they generate money by issuing that stock, and they would go out and they would buy factories, equipment, hire more people, and that therefore it was economically stimulating. But today, it's really just a big, huge casino. With financialization, in other words, the financial markets have become so much more important than the manufacturing or than the true economy. If you read what corporations are doing with the money when they issue these IPOs, or even the new trend in the direct listings where they're not generating any money, it is about giving the earlier investors a way out. So it is an exit strategy to get out near a top. And that's why it doesn't reflect what's happening in the real economy. And the central banks, their task is to keep the stock market floating. Because if people open up their retirement, their 401k statements and their retirement statements, and it looks okay, then they go, okay, everything must be okay. But they're still thinking with that old head. That hasn't been true for a very long time.
And isn't it a lot of it's just automated anyway? The stock market?
Over 80% of the markets, there's so many things that are going on that have not been tested. So yes, over 80% of the market is pure automated algorithms. When it hits this level, then this is the next thing that is automatically going to happen. And the problem, even though we've been going in this direction really since early 2000, where you have the brokerage houses that used to make a market. So in other words, if a stock is dropping or a bond is dropping rapidly, this brokerage would go in and buy it and then hold it. So it would put a floor under the price, and then they'd hold it, and then they would slowly sell it to their clients. So in that way, it would protect the prices. They're out of the markets. That you have, whether it's treasury bonds or stocks or what have you, there are almost no more market makers. Everything is automated by computers. And you have a lot of the herding mentality. So, like you mentioned, stock market's going up. Well, those formulas say buy simply because the market is going up. And on the other side of that, it will also say sell when the market, simply because the market's going down. And that is a huge problem why the central banks cannot allow it to get past a certain point, even into some of the corrections that we've had in October, and again after they did before they did the pivot in January. I mean, they were, in some ways, the central banks have already lost control, but they were about to lose full control of these markets because they're just ridiculously expensive. Valuations don't matter. It's just, is it going to keep going up?
So what about the real economy? Like, there's a lot of indicators that it's actually not doing so well at all. I'm thinking even, say, the housing market. I saw an article yesterday in stuff.co.nz, which is a New Zealand website, and it's talking about Australia, and it says up to a third of homes in parts of Melbourne and Sydney are being sold at a loss, with the rate likely to climb higher as a combination of falling prices and owners wanting to offload their properties is wiping hundreds of millions of dollars from the market. And then I know in Auckland and New Zealand, prices have been going down and people are struggling there. And I think in America, the housing market's like 7.8% drop or something, and 8% drop in prices.
Right. In new loan applications. And yes, we peaked out in 2018 and prices are indeed coming down. But part of that, it's interesting because that's what I'm working on at the moment. So I do have that in my head because that is happening on a global basis. The markets have topped out. They're on the other side of it. There is less and less home ownership because these things are not affordable for people. And when you talk about the rest of the economy, the prices on real estate and actually on everything has grown so much more quickly, inflated, I should say, not grown, that's garbage, has inflated so much more quickly than wages have inflated. So you have double-digit gains like in San Francisco. The year-over-year growth in homelessness, people living in their cars, and these are people with jobs, middle-class people, because affordability is through the roof, and people can't just do that. They can't afford the homes. But there's another interesting thing that's happening. Number one, and we all know about all the store closures, right? So all these big shopping malls, they're empty and they've been trying to reinvent themselves, but they haven't had any luck in stimulating more traffic. China, globally, I think they may have shifted some of the demand, but even in China, where Chinese people were going out and buying a lot of properties, in this country, demand for homes has declined 25%. So you're seeing this huge drop off in demand on a whole bunch of levels. And yet, when you look at the real estate indexes, Wall Street's indexes, they're near all-time highs. So they're not really reflecting, goes back to that other question you asked, it's not really reflecting what's happening in the real estate market. On top of that, what is also happening is so much going on in real estate right now. But what's also happening, just like we've seen all of the unicorns where it's get rich fast, and they just get all these early investors to fund them, even though the losses are as far as the eye can see. Now suddenly, magically, they're worth, 13 billion or 20 billion. So they are not having any trouble raising funds. And in fact, a lot of the home builders are now on a tear to build to rent. But the problem is, we're definitely in the third phase on the way down of the real estate market. No doubt about it. As you indicated, this is happening globally. But, who's really funding all of these startups, particularly when they come out in initial public offerings, the IPOs, valued at billions of dollars? They are, again, it's an exit strategy to give access to the markets to you and me so that they can get out near a top and then you and I eat it on the way down, although we aren't going to be stupid enough to buy that stuff. But it is so classic of the third phase where we're starting to drop precipitously, and then the opportunity will lie somewhere after that once all that overvaluation is worked off. Yeah, there's a ton happening in the real estate market. Really interesting.
And it leads me to, I think yesterday there was some announcements here in New Zealand that our logging industry is in some trouble because logging is fairly big. A lot of New Zealand logging exports to China, and it's fallen off the cliff exporting to China at the moment, which I guess if they're not building so much, then they're not going to be buying New Zealand logs, which of course flows on to other aspects. And what about shipping and transport generally? I mean, I hear that's not doing too well.
It's not. It is not doing well at all because you're inside of a global slowdown. It's, yes, we have the tariffs and the trade wars. You have Brexit. You have the EU. I mean, the globe is slowing down, and the US as well. It is all slowing down. I don't care how you dress that window. It is still all slowing down. And I'm wondering, I don't know if you know this or not, how much debt the timber industry has taken on with interest rate, because this is another huge problem globally, not just there, but I mean, for all of this, all of these corporations really took on debt at zero or near zero interest rates. So rather than getting out of debt, using this opportunity to properly consolidate their balance sheets, they've just grown a lot more debt because at that zero interest rate, their payments were the same to service, like, I don't know that this is accurate, but like twice as much debt on a monthly basis. And that's how everything's sold to everybody anymore anyway. Yeah, the iPhone is $1,000, but it's only $30 a month. Oh, okay, I can afford. That's crazy.
Yeah, you mentioned interest rates because that's the other thing I see a lot of the media saying, oh, the Fed's going to drop the interest rates, and they're basically talking, as if it's already happened. And but I don't think there's any guarantee, is there, that they're even going to do that. And even if they do, it's not the answer. But the other potential is they may not, because if the whole goal of the Federal Reserve is to crash the global economy, but doctoring it up so it looks like somebody else is to blame rather than them and the central banks. I mean, what are your thoughts? Do you think they will, or is it going to make any difference? Or?
I think they're between a rock and a hard place. But before we go there, let's kind of look at what the point of dropping interest rates is about, and that's to increase demand for credit, right? So then, in theory anyway, you borrow the money and you spend it, and that stimulates the economy for a minute. Well, interest rates have been held near zero for a decade. So what is the demand for credit now? Haven't all those that had that demand already satisfied that? So it's garbage dropping the interest rates down. The stock markets love it because that's free money, more free money to inflate the stock markets with. So that's why you see that move up in anticipation. But here's really the problem, Tony. That is, if the Fed lowers the interest rates this month and the ECB is talking about doing the same thing, and it does not stimulate the markets, everybody will know that the emperor has no clothes. In other words, they will absolutely understand. Now, I don't know that everybody, because I don't know who pays attention, but anybody that's paying attention to the markets and what the Federal Reserve and the other global central banks are doing, the problem is that it's like pushing on a string. The impact that it was intended to have, it's already had. And now they're going to try and keep the markets propped up. Maybe not. Because there is frankly no doubt in my mind, but that enough risk has been transferred from the few, from the elites, to the many. And, I'm just really wondering, when I'm seeing with yield curves and all the indicators, I don't think this is going to last very long. And they've already, I don't care if they lower the rates or not, it's not going to have the impact that in theory it should have, because you just don't have that level of demand for credit anymore. And at some point, when you take on credit, you take on debt, you got to deal with the debt. You either have to roll it over, you have to pay it, or you have to default on it. And that's what the hyperinflation is about, is defaulting on it, because we're to a point here where we can't roll it over, and we certainly can't pay it. I mean, that's been true for a long time. So that means you got to default.
And as we've discussed before, and you mentioned, once a certain amount of enough risk has been transferred so that the elites get away scot-free and everyone else carries a can. I mean, to me, the Federal Reserve is just their instrument to do that, probably totally knowingly. So when they're ready, that'll be that. They can pretend and make out as if it's everyone else's fault, but ultimately
right,
that's where the buck stops. But what about the precious metals and gold and silver? I've been really watching that and noticing that gold has been kind of going up. Well, it's had a little bit of a pullback the last couple of days, but nothing huge. But silver's still languishing down in, very low levels. It's not following it at this point.
Well, there's two things on that. From a purely technical vantage point, with spot gold, which is a Wall Street product, but there is a cup formation that came to conclusion. So what that means is it started up at this level about 1350, and then it went all the way down to like 1198 or something like that. And now it's, since 2016, you see a series of higher and higher lows. So it broke out. In other words, it broke above that 1350 level, went bam, just like that, to 1440. Because when you have a breakout, it's kind of like holding your hand on a spring. And when you remove your hand, then the price is going to shoot. And in this particular case, it's going to shoot up. So the bottom, as a technician, the bottom on gold, spot gold, is going to be 1350. So, with it bouncing around 1400, I'm good with that. It's just working off some bought positions, profit taking in there. But it is not even, I haven't seen it yet even marginally come close to going back to the 1350. So that's a key level. So now what's happening with gold, once it breaks above, I believe it's 1550 on the graphs, then I really don't see any resistance. And I think it's going to come to the cup that it started in 2011 at that 1900 level. So that's my next price target. And I do think that we're going to see that before the end of the year. So I would definitely be prepared to say, without any doubt in my mind, I mean, these are things I can't control, but without any doubt in my mind, the bottom is absolutely in on gold. And if you're waiting for it to go back below that 1350, you're not going to see it. And in fact, you watched Egon, he said he would not see that in his lifetime. Okay?
That's interesting. So, but I mean, silver, I always used to look for quite a couple of years here and think silver, okay, they like to keep it sort of between about $16 and $18. and it never goes much above or below for a couple of years, but then it went down, and now we've been sitting at this kind of $15-ish mark, and it's not really moving like gold is. What do you think?
Well, number one, when you look at the graph and the chart on spot silver, again, a Wall Street product, okay, versus the silver, what I see is a very clear bottom base for that cup formation. It too is doing a cup formation. A cup formation is accumulation pattern where smart money is accumulating quietly. So they don't want you to accumulate it, but they are. And I would say the same thing with silver that I just said with gold. Buying it anywhere in here, you are getting near a bottom. Having also said that, why is it not following gold? Because silver is more of an industrial metal. Gold is more of a monetary metal. And while both of them are used throughout the entire global economy, silver is going to be more impacted by a slowing economy than gold is. So gold is more reflective, spot gold is more reflective of what's happening in the currency markets, which we're now headed toward a higher level of currency wars overtly, and that scares me. But it's but silver, physical silver, when do you want to buy it? You want to buy these things. You want to buy anything when there's blood on the streets, when they are the most unloved, So for me, I continue to accumulate both.
Yeah, I mean, to me,
thank you.
Yeah, to me, silver is like right now it's a great time to be buying it. Having said that, in terms of New Zealand dollars, because of course it's basically based on US dollars, everyone looks at it like that. But in terms of New Zealand, with the price of actually buying physical silver, like say you want to go and buy an ounce of silver, whatever it is, a maple or something,
Right.
It hasn't really changed all that much through all the ups and downs of the spot market. When you actually go to buy it, and I've been looking at this for a few years, I mean, the move has not really been that much. It hasn't come down a lot. It never went up a huge amount. It stayed kind of relatively consistent, give or take a bit, in New Zealand dollars on the street. And, so you kind of think, you're not going to get it any cheaper.
Right. You are not. And actually, to see from a technician's, perspective again, now I'm not saying that the full base is in because I'm looking for that pattern. And then that pattern will come. But I think it could also come a whole lot more quickly than people realize that it could come. But once it breaks certain key levels, and I just did this in a piece where I drew the line so that everybody could see what those key levels are. I don't really remember them off the top of my head. But once it breaks a certain key level, it'll easily go to 50. But in both cases, whether you're looking at gold or silver, we're talking Wall Street's product that was specifically and declaredly designed to keep people away from the physical metals markets. So neither one of those at all reflects the true fundamental value of either one of those real money assets, which in gold's case, I've been saying 10,000. Honestly, if I were being absolutely honest with what the data tells me, if they were to do a reset today, we would easily see gold go way north than 10,000. I think, probably closer to 50. And that still is not fully reflected. That would just be the first part of it. As the currencies lose value, that's the thing about physical gold and silver. The currencies, basically, whether it's the New Zealand dollar or the US dollar or the Chinese yuan or the Swedish krona or whatever, it doesn't matter what it is. Those are all government debt-based currencies. They're fiat currencies. They have no value unless you attribute them to have value. and you're willing to work for them, and you're willing to barter with them, and you're willing to try and save them for future use. But by design, they've lost like 97, 98% of their purchasing power value. And just like we were talking about, earlier, the inflation in your cost of living is much higher than the inflation in your wages. And that too is by design. That's really what's enabled the income inequality, where you have corporate CEOs making 5,000 times what their average workers are making. This is higher than it was in 1928, before the stock market crash in 1929, when this whole big experiment was kicking off.
Yeah.
So,
I was thinking about it last night, and you hear people say, gold and precious metals and that's going to be useless and worthless when they get to a digital economy and so on. And because we've had Moynihan from Bank of America saying we want a cashless society, that'll be the great thing for them and all that. But at the same time, you've got central banks accumulating gold, and you have confiscations of gold.
Ever.
Why they wouldn't be looking at confiscations of gold if they didn't intend to carry it into whatever system they come up with anyway. So I just think that's crazy when people think of it like that. The reality is you don't confiscate something that's got no value.
Right. And why does gold and silver have value? They don't want you to think about it. They don't want you to accumulate it. As you pointed out, they are. But it always has value. It's never gone to zero because it has the broadest buyer base. You have more buyers of gold and silver than you do of any other asset class. Stocks, bonds, that's over here. That's not used across the global economy. They can't use that in manufacturing because it's intangible. It doesn't exist, right? Digital currencies, it's the same thing. What did I do? Okay, I'm going to show this to you. This very nice viewer sent me this, and in it are 3,000 Bitcoins that he just wanted to thank me for the services. Okay? The letter was out. I can't read it, but it was really it was very, very entertaining.
Because I'm not recording the video, but people I should actually have got a screenshot. Send me a picture of it. And I'll drop it into the video.
Picture of it?
Yeah.
Because the point is, do they want us to go to digital currencies? Heck yes. In fact, the Bank for International Settlements is now pushing that and rushing that for global central banks in a very big, big way. I'm going to do a video on that soon. Why? Because it gives them more control. People think that is outside of their control. No. Yeah. Look at their money flower. It is exactly within their control. Look at China. China controls the internet. China controls everything, but China controls the internet that is inside of their borders. There is nothing that's going online that's going over electric grids, through computer systems. There is nothing that goes that way that is invisible. And if they can get everybody to go to digital currencies, read their work, then you can have global taxation. You can have lifetime taxation, right?
Yeah.
I mean, that's for governments. Taxation is what it's all about. Even though in the U.S. Constitution originally, it was the individuals that were supposed to be at the top of the heap. And then the states were supposed to support individuals' rights. And then the federal government was supposed to support the states so they could support individuals' rights. That's not the way it is anywhere. A digital system means that they can control everything. Oh, you jaywalk. I was just listening to something on the facial recognition, and in China, this guy jaywalked. They just, boom, took the money out of his account. Like 20 seconds after he jaywalked, maybe not even. Boom,
China's scary, absolutely scary. I watched a video, this is going off track, I won't go down it much, but a BBC video the other day where they showed they were allowed inside one of the Chinese re-education camps, which is basically if somebody has a belief in God, they send them to these camps to re-educate them like children, and they say, oh, these are, re-education things, it's wonderful, we're stopping crime before it happens. It was a prison and they treat them like children. It's scary, like, with all the surveillance you were just talking about and all that. I mean, China's, boy, it's a scary place. But what's happening with gold and silver in places like China and India at the moment?
Well, it's really, first of all, it is going up in terms of their currencies because it's a real currency. But what are their governments doing but accumulating like crazy? And it was 2006 when the Chinese government allowed their citizens to start buying gold again. And they made it really, really, really easy for them because they could actually buy it through their bank accounts, so their banks hold it. Now, I'm thinking that it makes it a whole lot easier to confiscate when a bank is holding it. And India, well, they have had for years this program. In fact, I have a really interesting document from the Central Bank of India. I think it's dated like 99 or something like that, on the dematerialization of gold. In other words, taking something like that and, just make it digital. And they've tried scheme after scheme after scheme to try and get the population to deposit their gold in the banks. But do not forget that when they demonetized their currencies in 2016, not that long ago, that they actually did go door to door doing a gold confiscation. Now, I don't know that it was, I don't know how widespread it was or it wasn't, but I have that from the Department of the Treasury, from India's, not mine, not some random article. And they only allowed them to keep a certain level. So that's what's happening in China and India in terms of their gold. They don't want their population, just like any other country, really. They don't want their population to really hold their wealth. The whole point of fiat money is to get people to volunteer it without knowing.
So,
right?
So that's, this is, again, it's proving that gold and silver is real money. In fact, I call it God's true money. I don't think that's the one God created. No, everything else, digital, fiat, that's just man's creation. So we just say, okay, it's definitely got real value. I don't care, people that think it doesn't. I just think they need to really look at the truth. But the other thing is then people are going to go, well, heck, if they're going to confiscate it, why do I want to get it? So now, what would you answer those people?
Okay, well, that is why personally, because I do believe that they will confiscate it, that I want to buy it in the form that I can actually use in the normal marketplace to take advantage of the upcoming opportunities. And so I personally, I look at what does the IRS say I can or cannot hold in an IRA. And therefore, I only buy, this is not true with silver, but with gold for sure, I only buy collectibles because I want to be in the same classification. If I buy my 1 little ounce, numismatic coin and I spend whatever, $2,500, $5,000 on something like that, I'm in the same exact category as the elite, the 1%ers that have paid like, say, $8 million for 1 ounce of gold. Because I'm thinking, number one, it's less than 2% of all the gold that's out there. So that'd be way harder on that level to confiscate. And it's not held in a vault that is easy for them to confiscate. In addition, anybody that can pay $8 million for 1 ounce of gold probably can either be the guy that writes the laws or could influence the guys
Yeah.
that write the laws.
Yeah.
And they are not going to give it up for face value, which in the older US coins is $20, or even if they did it based on the newer coins, which an ounce of gold has a $50 face value, right? So they couldn't even inspire them to give it up. So even though governments can do anything they want, and that's certainly beyond my control, I try and do what the smartest guys in the room are doing for themselves, because I'm most likely to be on the right side of that if I do that.
What about silver? I mean, that would be incredibly difficult to confiscate. And there's a lot of people like me, silver is in the range that I can afford. Gold is kind of out of my reach. I think there'd be a lot of listeners here to this channel that'd be in the same sort of, there's a lot of struggling people. And so silver, what's the likelihood of that being confiscated, do you think? And then following on for that, what sort of silver should people buy?
Well, I don't, even though silver was also confiscated in 33, because it gets used up in manufacturing, gold, they can account for all of it. But with silver, they can't. So I do think that would be a lot harder to confiscate. So I'm not as concerned with whether it's new or a collectible with silver as I am with gold. For me, I like fractional pieces. In other words, a dime it's not actually a tenth of an ounce, but it's pretty close to a tenth of an ounce. A quarter, pre-1964 is close to a quarter of an ounce. A $50 is close to a half an ounce, and a silver dollar is close to an ounce. So I like the different sizes, which, by the way, you can also do with gold. So even though 1,400 might not be affordable, you can get like a gold Swiss franc or even a 10 franc, which is smaller than that, for just, $150 or $200 or $300, something like that. So it's still good to have a combination of the two, because gold is the primary currency metal. But I do love silver. For me, silver is about barterability. So when cash has no value, you could still buy that pint of strawberries or that gallon of gas or, that prescription, God forbid, but, if you need it. So you want money that you can use on the streets. I personally am not as concerned about confiscation with silver as I am about gold. So I have it all. I have the old silver. I have the new silver. I'm kind of looking at number one, what am I trying to accomplish? That's why I like the different sizes, because it's easier to put two dimes together than to break a quarter in half. So I like a lot of the smaller pieces. But, I'm really looking to get it as close to spot as possible. And I think if they did the reset today, you would see silver would follow gold in that case. And you would see it at minimum, I think, $600 an ounce, minimum. But the dollars wouldn't have any value. So even especially when it goes to that, you are not going to want to convert it into dollars, whether they're New Zealand dollars or US dollars, because everybody will be very clear on what's happening at that point.
So what about the people that are looking at silver and buying things like buffaloes and American eagles and maples and all that? That's a good, you think?
Absolutely. Those are a little bit more expensive than the rounds or the pre-64s. But when you look at its true value, if you're more comfortable with an American silver eagle or, something like that, so it costs you $2 or $3 more than it does a round, it doesn't really matter. So yes, those are a great way to do it.
Okay, and what about half-ounce coins? Do you think people should also go to smaller ones and try and get them as well?
Absolutely.
Yeah.
Yeah, you need a variety of sizes. That's true for silver. That's true for gold. You need a variety of sizes, because change, if you go in to pay your property tax bill, right? And you only have 1 ounce pieces, well, you got to cash in the whole 1 ounce piece when you might have only needed the equivalent of 1/10 of an ounce. You see what I'm saying?
Yes, yeah, I do.
So you need a variety of
Yeah.
sizes because cash, any change would become irrelevant. I mean, I think in Greece they were giving candy bars for change.
Oh, great. Yeah.
Seriously.
Yeah.
I mean, they'll give you whatever because who wanted the currency had no value.
Yeah.
So,
And
yes.
in terms of, we're just going back to that interest rate thing and with the price of gold and silver, because people think, oh, it's going to depend on what the Fed does with the interest rates in terms of whether gold goes up or not. But the point of it is in 2006, gold was spiking big time when the interest rates were going up. And then when the interest rates were coming down, gold was going up again. So it didn't really matter either way.
It doesn't matter because gold, real gold, a real silver is real money, as you said. And so the rest of it is manipulation. And you know, literally it costs like a JP Morgan $150 to control 500 ounces of gold and 5,000 ounces of silver. $150. And for the central banks, it's $110 to control 500 ounces of gold and 5,000 ounces of silver.
Okay, so now just talking quickly because our time's running down, but about the banks, what's happening with Deutsche Bank and people like that at the moment?
Deutsche Bank is insolvent. Deutsche Bank has been insolvent. They're apparently they're setting up a bad bank to move their bad derivatives off their books into this bad bank, but they still have to deal with the the derivatives. So Deutsche Bank could easily be the epicenter and what everybody could point to. Oh, it's because of Deutsche Bank. But, Deutsche Bank is too big to fail if they have the intention of keeping the system together. But it has already failed. I mean, look at the price of the stock is down, 90% since the crisis. And this would not be their first bad bank. So it's actually, garbage. And when you're talking about the banks, and you're talking specifically about Deutsche Bank, it passed the U.S. stress tests. So what does that mean? Well, it means they can distribute an awful lot of money to their shareholders, take that money out of their system so that the next crisis, that money's not there. It's gone. It's gone. But depositors' money's there, ripe for being bailed in. And that's definitely what we're going to see. There isn't one doubt in my mind about that.
Okay, so now if you give our listeners your website and YouTube channel, and then maybe, finish out by telling them what you think people, what's the really important message to get across to them now in terms of what people should do?
Okay. You can get to our website just by going to itmtrading.com. The YouTube channel, we publish things on there every single week, at least 3. And that's you. If you go into YouTube, you could put in ITM Trading, or you could put my name in, Lynette Zang. And I have a whole team of strategy specialists. And quite honestly, I'm seeing way too many things, too many technical occurrences. So when you say, what should people do? They need to get protected, and they need to do it as quickly as they can. If they are still sitting inside of these bloated, unreal casino markets, and they have the ability to do so, then everybody's got to do what they're comfortable with, but get out. Get out now. If you can't get out, because a lot of people are holding their retirement money in there and they don't actually have the ability to cash that in, then you need to get it protected with physical gold and silver. What really makes us different than any other physical gold and silver dealer is the strategy that I personally developed based upon those repeatable patterns so that you know how much silver you're going to need to survive. I like it. Now, not everybody can do this, but I like to have enough of the physical barterable silver and barterable gold for 10 years, because it's going to take a minute to work through this whole mess and reset the entire system. So we like to work with people so they know, well, how much gold do I need to protect the assets or the money that I have stuck in the markets? How much silver do I need to sustain my standard of living? And what do I need to do to put myself in a position to take advantage of the opportunities that always come up during crisis? Because crisis is about wealth transfer. And my personal feeling is we want the wealth to transfer our way, because mostly it just transfers to the elites and they get richer.
Yeah.
Well, do what they're doing. They're buying gold. They're buying silver. So should you. And you should do it as much as you can, as quickly as you can, along with food, water, energy security, barterability, wealth preservation, and community and shelter.
That's exactly what I was going to ask you to tell us. Yeah, was that what you just shared there? Because obviously, if there's a big unwinding, like a major crisis and crash, then all of those things are going to be go by the wayside in some way or other, be influenced by that, and people are going to need it. And then you look at just other things like the food crisis, which is obviously developing with crop losses and all that, and just makes sense to be prepared in all of the directions, I think.
Well, no matter what's happening, these are things that we all need. We always have to have shelter and food and security. We all need those things. And I'd also like people, if you're on a tight budget, keep in mind that any skill sets that you possess are barterable. So, not that I ever really want to do this again, but I know how to lay irrigation. That's a barterable skill. I could sell that to somebody in exchange for eggs or toilet paper or whatever. Yeah. And so any skill sets or anything physical. And when I just said toilet paper, believe it or not, toilet paper becomes a very big issue during hyperinflation. Now, I have lots of grape leaves, so I don't know that I care that much. But for people that are, on, a tight budget, there are always ways to prepare. Dried beans and rice. Wow, you put those two together, you got a complete protein. Throw in a can of tomatoes, it's not such bad eating. Frozen sprouts. I keep sprouting seeds. You can get a nice big 10-pound bag, or even a pound bag is a lot of sprouting seeds. Broccoli, super nutritious. You rinse it off with water for 3 days, you have live food. So there's more than one way to accumulate. And, quite honestly, both gold and silver in any form is always monetary at its base. So it doesn't have to just be in coin form. It can be in any form. And it doesn't have to be pretty. It can be bent and broken and dinged and all of that. And it still has that monetary value. So yeah, all of those areas, you need to look at, where am I weakest? And then, but unfortunately, where we are in this trend cycle right now, get it done as quickly as you can. Get whatever you can get done. Get it done as quickly as you can. We're not getting signals that this is going to last for another 10 years. In fact, that not just the inverted yield curve, but the difference in those spreads. I mean, are we already in the recession and we don't know it? I'm thinking yes. And the monetary velocity chart, so that's the speed at which money changes hands, that has begun to turn up. So even though I wouldn't say that's pervasive yet, that's an indication that the hyperinflation there are too many indications that we've already begun. So you got to get it done as quickly as you can. I'm sorry.
Awesome advice. So, yeah, one last time, give our listeners where they can find you online.
Well, itmtrading.com, or they can go into YouTube and put in ITM Trading or Lynette Zang. And of course, they can call us at 888-696-4653. And, we have a whole team of strategy specialists that are fully trained in all of this. And we're all here to give service.
Yeah, and that's really good. This has been another great discussion. I've enjoyed it. It's always fun. So, yeah, thank you for coming back on the A Minute to Midnight show. And I hope you'll get to New Zealand sometime.
I think we have to put that in the agenda, because you never want to leave things undone. And that is something that's been undone for a while. So, yeah, we will.
Just don't choose winter. Come some other time.
Yeah, maybe you should come to Phoenix. Although at 111 right now, it's a little hot.
Yeah, I reckon.
But you could go swimming with my fishes and my ducks.
Oh, yeah. Okay. Well, actually, people should have a look at your stuff on your ponds and all of that too, because that's another whole subject we can't go into today. But yeah.
Right. But it is part of the food, water, energy part. So, yes, it's not just because it's fabulous, although it is.
Yep. Well, awesome. So thank you again so much for coming on the show, and we'll have to do it again sometime, and goodness knows what the situation will be like the next time.
I'm telling you, the system has already, when I say the bomb bubble is popping, it is. It's doing it now. So what are you waiting for?
Yep, true. Thank you.
My pleasure. Thank you.
And folks, don't forget our website, aminutetomidnight.com. Visit us there, and on YouTube and on iTunes you can find our shows as well. And of course we do put articles on our website too. And all the music I write, play and record that's used in their shows. And A Minute to Midnight is run 100% by donations. If you want to help us out, that's always greatly appreciated. And you can donate on our website as well, aminutetomidnight.com. We really appreciate the people that help us out. Couldn't do it without your help. And don't forget to subscribe to us, and also hit the like button on this, would be greatly appreciated too. And that's about it for today. God bless, have a great week, and we'll catch you in a few days' time, hopefully, with another show.